Let's jump into the presentation. Once again, thanks for joining us with our webinar here today on three key aspects of farm business management that I've seen over the last 5 to 10 years in successful businesses and focusing on successful, financially sound, equity-rich farming operations. First of all, we'll emphasize farming is tough. None of this is easy. And on top of that, farming is super competitive. So at Harvest Profit, our mission is to help farmers thrive in an ever volatile farm economy. We want to provide tools, thought processes, frameworks, ideas to help farmers make confident farm finance, accounting, risk management decisions, the overall farm business, make those decisions in an environment where commodity prices are always changing, the macroeconomic climate is always changing, and essentially embracing that volatility. Don't be afraid to take action and make confident, profitable farm business decisions in this always changing farming environment. So the three main goals of the webinar today are to focus on controlling what you can. Things are always going to be changing, so let's reduce the focus on what happened yesterday and what's going to happen tomorrow and make the best decision with the information in front of us today. Operating your farm like a Fortune 500 business, so taking some next level financial and business philosophies and applying them to your farming operation, and then reducing the emotion that's inherent in grain marketing. So first of all, who the heck am I? My name is Nick Horob. I was born and raised in western North Dakota. Both sides of my family farmed. I helped out on the family farm growing up doing odds and ends. I went and attended NDSU, North Dakota State. I graduated from the University of Minnesota with a degree in finance. I'll get into my background a little more, but I worked at a very successful private equity fund in Minneapolis for 3 years. Sat on one of the board of directors of one of their portfolio companies, was the youngest employee to ever do so. Learned a lot about what makes businesses in industries such as manufacturing, oil and gas, consumer electronics, distribution businesses, what makes those businesses succeed, and at the same time got to experience the volatility that really came into commodity markets in 2007 and 2008. Specifically, watched wheat prices go from $5 to $25 back down to single digits, with many farming operations not taking advantage of any of the double-digit wheat prices. And with the advent of crop insurance combined with the marketing tools available to us, I was penciling out, you can guarantee yourself a $200 an acre profit or pay off every penny of debt on your farm if you make 2 phone calls. My first sales during that volatile time would have looked too cheap in hindsight, but when it was all said and done, there were a couple opportunities there for farms to take advantage of that volatility and become debt free. And I saw how it's really easy to just get hamstrung by the volatility and just leads to inaction. There's so many opinions about what's going to happen tomorrow, what's going to happen next week, that it leads to a lot of inaction and very little confidence in the farm business decision-making process. So I quit Shoreview Industries. I went to work for, and I currently do consult for 30 farms through MarketWise Ag Services. I help farmers make common sense, profit-focused farm finance, risk management decisions. In my time over the last 6 years, I've become very acutely aware that there's not a lot of tools that help farmers make these profit-focused farm business decisions. And so I've spent the last year building out a set of tools at Harvest Profit that I think are going to help farms focus on what matters most in their business, and that is the bottom line. I have a passion for helping farmers, helping businesses make common sense, profit focused decisions. Once again, I worked at Shoreview. Shoreview, a $900 million private equity firm in Minneapolis that is done very, very well. I decided to leave there because I missed the rural side of farming, small businesses, basically being out in the country where I grew up. I wanted to get back into that environment. Well, at Shoreview, I worked on the board of directors. I was named to the board of directors in my early 20s of a company called Renegade. They make high-end toy haulers and motor coaches specifically for the racing industry. They were decimated by the recession in 2008, 2009, and we worked hard managing working capital, renegotiating debt structures to weather the storm, and what now is a very profitable business once again. So, have experience dealing with all sorts of financial volatility, the highs and the lows. What can we do to protect ourselves from the lows when times are good, and what can we do to weather the storm when times are bad? So, taking a lot of those lessons and trying to apply them to the farm is where I am at today. Well, that's enough about me. Let's get into the meat of the webinar here. So the first thing that I really try to hammer home is control what you can. And what this really starts with is we need to know our numbers. You need to, well, first of all, be outside of the scope of this webinar, as a farmer, your prerequisite is you need to maximize your crop production versus your peers given your local variables. That is outside of the scope of my level of expertise, but I see all the time the financially sound operations I work with. Basically, all farms today, it's a prerequisite that you have to be a good farmer. So focus on producing as much yield as you can for a cost-effective manner given your local variables. So that's the number one prerequisite. Control the factors that affect your yield that you can control. Fertility, tillage practices, those sorts of things. That is obvious. And then number two, have an ROI-focused approach to your farm business, and that just starts with knowing your numbers. You can't calculate a return on investment if you don't know the numbers of your farm. So let's walk through two examples of how knowing your numbers can really help you or hurt you. And the first is a situation with a producer that I knew a few years ago, and he was participating in a cash rent auction, and he ended up not winning the auction. And I asked him, if you don't mind disclosing, what did you end up paying for, or what was your offer for the farm? And he said, well, I don't want to tell you. And I said, well, why wouldn't you want to tell me? And he said, oh, it's way too high, and it would have definitely been unprofitable. And I said, well, why did you bid on the farm? And this was a couple thousand acre operation that had a solid land base already, and the response was, well, I bid the price I did because that's what it takes to get the land. This was during the heat of the commodity price bubble. We would have had to sell a considerable amount of grain going out a year or two to even make this feasible at all, and still we probably would have been underwater. And so do things that focus on your ROI and not simply to pick up new acreage or farm the land across from a competitor. Have a numbers oriented approach. If this farm would have slotted perfectly into the guy's operation, it would have required no more equipment, no more overhead, no more labor, then maybe we could push the rents. But this was way out of the top end of any numbers that made sense. And it was essentially just a decision based on gut feel and emotion. And, you know, the farms that the higher cash rents that were picked up definitely ended up hurting guys. And a couple farms that um, I'm familiar with, the high cash rents combined with um, buying way too much equipment has taken them out of the farm just because they made somewhat emotional, not ROI focused decisions and didn't know their numbers going forward. So knowing your numbers is the key to being a successful farm business. Um, the producer that paid well above market cash rent and bought two brand new big pieces of equipment and financed them, the cash flow burden going forward, for some guys required $5 corn and $13, $14 soybeans. Well, if you know your numbers with the realization that commodity prices are cyclical, um, arguably those decisions would have been done different. The second scenario is a couple farms I know aggressively grew their operation in 2010 and 2011, and the same producers, the same mindset as the previous example, they paid pretty healthy cash rent compared to historical. But at the time, we had a really great crop insurance price in 2011. We could forward contract crop in 2012. So we could essentially lock in profits for the first 2 or 3 years of that contract, or lock in profits on a conservative but decent amount of our production. And so it was just a smart, everybody at the time thought, oh, so and so, he's crazy for picking up the land at that price. Well, it's profitable, and you can lock in that profit. And fast forward now to 2014, 2015, 2016, commodity prices had fallen dramatically, but neighboring farms were clamoring all over themselves to pay the cash rent that the producer paid 2 or 3 years ago when commodity prices were much higher and supported that. So that's an opportunity to think about going forward. If this rally we've had in commodities the early part of the summer is sustainable, approach your future land rent decisions from an objectives numbers based standpoint. Maybe they do justify cash rents creeping back up, but all in all, it just goes to show that if you know your numbers, have a system in place to analyze them, you can look for opportunities to intelligently expand, or know when we just need to sit back and do nothing because the cost of adding equipment or the cost of growing the farm is just too expensive for the volatility that we have. So tools to help you make common sense farm business decisions. The first is this farm cash flow risk matrix. This is the profit and loss at a variety of yields and a variety of prices. I built this into the software that I have, but it's based on a spreadsheet. This uses cash insurance indemnity payments. If you get completely wiped out and have to buy out of some of your contracts, it includes the cost to do that. If you go over and click the download button that's going to flash here shortly, you can download this spreadsheet for free, customize it, play with it. But when faced with our future decisions on marketing, farm finance, farm growth, making investments, analyze what risks am I comfortable with. Oftentimes a little bit of proactive risk management combined with insurance will allow us to get to a level of risk that we're comfortable with, and maybe we can afford to slot in that new planter or those new upgrades to our line, or maybe pick up and buy a piece of ground. But this just a fun, quick tool that you can evaluate your farm profit and loss and just your overall risk by changing any of the factors and any of the crops. So download it for free. Let me know if you have any questions on it. I'm more than happy to help. And then we have in our blog a series on Excel. So if you wanted to build some tools and some different, some customizable tools, I've added some tutorials on some more intermediate features of Excel that you can help build this numbers-based analysis engine to ensure that we're just making common sense, profit-focused farm business decisions. And then I'll jump into the software that we've developed here, Harvest Profit, which is now live. It allows us to track our costs, build income statements, track them, every day. So I'll walk through it really quick, give you a quick overview. Here's a simple dashboard. We're probably going to be adding more to this dashboard over time, but knowing where our costs are for the 2016 crop, knowing how much commodities we have sold at any given time, what's our average price, and how we build this budget. We have a list of our fields, our land cost per acre, a list of our inputs from fertilizer and seed and chemical, crop insurance, fuel, labor. We can put in whatever kind of expenses. We can allocate them to all or one of our crops. We can add in revenue. And then we can take our variable expenses and we can apply them to each one of our fields. So we can place a certain amount of fertilizer per acre, our seeds per acre, our chemicals per acre. Ignore some of these numbers; they're kind of fill numbers. But we can apply these expenses to each field, and if you do the same chemical program on all of your cornfields, you can just copy it to all your cornfields. So we're trying to make it very detailed, but very easy to build a realistic budget and update it throughout the growing season. And then we get a profit and loss. Yesterday, the markets were up, and even though this farm has a healthy percentage sold, we can see that our projected farm income is up $20,000. Rather than fixating on a sale that we might have made yesterday or a hedge, our farm is in the green again today. So what do we do with this knowledge today? Is our crop advanced enough where we're comfortable selling a little more? If so, maybe we need to lock that in, because our projected profit on this 3,000 acres and change farm is 170,000. Maybe we just sit back because we're comfortable with our sales, or maybe we look at that and say, geez, this was a red number all year. We need to get started. So just understanding where our profit and loss is based on our actual farm budget that changes throughout the year. And then throwing in some spreadsheet-like functionality. We can enter in all of our contracts here. So this 398 is our contracted bushels at their contract price plus our unsold bushels at today's price. So we can quickly change this and see, geez, a 25, 30-cent rally in corn takes us to $270,000 of profit. Or are we comfortable with our corn average price going back down to, say, 360? Well, now we're approaching break even. So maybe we need to lock in a little bit more and bring our average price up to 410. What is your goal? Nobody can tell you. And then also another feature we've added is we can have budget prices. So I threw in some really optimistic $6 corn and $15 soybeans for our unsold bushels in this farm. So if we switch our budget price, if instead of using the market price on our unsold bushels, we use the budget price, that is awesome. We'll have a lot of bushels that are sold way cheaper than that, but that is a fun number that we can look at. And then some other features, I'll get into some other ones here, but we can manage all of our contracts, from forward contracts to hedge to arrives. We can put in basis contracts, futures, cash sales, We're working on options now, and that'll be in here. That's high up on the to-do list. But all in all, an easy way to manage our contracts and have a living, breathing farm income statement. So instead of focusing on what price did I sell yesterday, we can look at our farm is up $20,000 day over day. That's fun. That is a good issue to have. So let's jump back to the presentation here. So we think somehow having a living, breathing farm income statement that focuses on your bottom line from a year-to-year basis is where a person needs to be, instead of just updating your budget once in the winter and the actuals again at the end of the year. We need to know where we're at throughout the growing season. So getting into the second phase in building up your farm for long-term success is managing it like a Fortune 500 business. A business has many costs and profit centers, many manufacturing plants, very similar to a farm, but a farm is comprised of multiple fields. So we need to be not only looking at the enterprise, we need to be monitoring our farm on a field by field basis and making adjustments to our operation based on that analysis. So making objective data focused decisions on your farm and not gut feel or emotional decisions. So renting versus buying. Maybe the fields that you own contribute much more to your bottom line over the years. So keeping that in mind when purchasing opportunities come up. Maybe the cash flow that comes with buying land, you just can't support those cash flow payments and you have to seek out rental opportunities. Many of these seem like common sense decisions, but at the end of the day, you need to know the numbers behind them. High productivity, high rent versus maybe some lower productivity, lower rent ground. You can compare your fields over time. Is that A-class farm that I pay A-class rents for, is that out profiting the lower productivity ground? The common sense answer is more often than not yes, but maybe not. Or share crop. Is a share crop make sense? Or do the good years in the under a cash rent scenario more than offset the poor years? Well, we'll never know unless we track that from year to year and on a field by field basis. And then maximizing our overhead efficiency. If we add 300 acres without having to add any more labor or overhead, how does that affect our bottom line? So once again, just getting back to tracking our numbers. So if we jump out here and take a look at the Harvest Profit software, first thing I'll show you is if we want to switch to 2017, we can copy over all of our inputs and prices, all of our rents, and we can essentially just start over from scratch and build that budget very simply. So that it makes using this to build multi-year analysis and track that much easier than a spreadsheet. I love spreadsheets, but they really lack when you start piling new year on top of new year on top of new year. So here, if we go to our profit and loss, and then we look at our, we can look at our profit and loss by field, and we can judge our fields on a yearly basis. And also, once we have multiple years of data in here, we can, with the flip of this toggle, take a look at our cumulative farm profits over all of time with just the flip of a switch. So you can do something like that in a spreadsheet, but it's going to take a really long time. So we're trying to make this easy for your farm to evaluate the farm on a more granular level than the enterprise. And you can do that in a spreadsheet, but we think that software really jumps out when trying to do that. So the third thing is reducing the emotion associated with grain marketing. I speak with a number of operations on a regular basis who are debt free, and they rarely get emotional about their grain marketing because they're focused on the bottom line and making sales during the seasonally strong times of the year. And if they end up being a little too cheap, so be it. But they know their numbers, make profitable sales, and are just consistent with that process over time. It's not easy. It's far from easy. Our emotions are our enemy when it comes to grain marketing. We get greedy, we get ecstatic, we get depressed, we get panicky. It's just not an easy process. Every farm is different. Everybody has different emotions. Crafting a marketing plan around your emotions and your logistics and your cost structure and having a custom plan or framework in place, I feel is very important. So 2 key points. It's very hard, if not impossible, to beat the markets. There's been many studies done, and I'll just show you one here, that over time, mutual funds, professionally managed mutual funds, outperform the market by, on average, between 1% and 5%. And the vast majority of that underperformance comes from the fee structure and the transaction costs embedded in that strategy. So all in all, these very highly compensated, well-educated people are proven over time that it's very, very hard to beat the market. So how do we think that our gut or listening to somebody on the radio will give us that edge? At the end of the day, what we do know about commodity markets is they do display seasonal tendencies. The market prices in premium during times at which the crop is possibly in peril. It doesn't mean that it's overpriced at that time. It's just based on the risk factors that the market knows at that day. Premium prices tend to be during when the unknowns regarding the crop are in place. The early spring through the early summer tends to be the best time to market our crops. So here is a 30-year chart of corn seasonals, and as you can see, from March until June, that tends to be the premium time to look at marketing our production. If you look at, I call September the month of death. July can be pretty ugly once the market is comfortable that the crop has been planted. The forecast looks decent. The premium can come out of the market very fast. Not always, but there is a tendency. Here's a soybean chart. Once again, spring, early summer, when during planting, during the early part of the growing season, tends to offer us premium prices. So how do we approach this? Personally, I think you need to increase the probability of profitable prices by spreading your bets. It doesn't mean you have to sell. You should sell. I don't think you should sell all of your crop the seasonally opportune time after it's in the bin, all of it before harvest. But if we know that that marketing period gives us the best probability or a good probability of getting solid profitable prices, we should be looking at selling some of our production every year during that time frame. And personally, I'm not the best at sitting on unsold bushels all the way till next summer, so I favor doing some forward contracting. Maybe a person is very uncomfortable with forward contracting, so you stick to 10, 20, 30% of your crop, market the majority of it the next growing season. Or you split it up and do 20% 2 years before, 20% that year during the growing season, and 20%, and the rest the following growing season, targeting up to 3, maybe even 4 of these seasonally opportune times to market your crop. And then understanding that what decisions you've made in the past are done. We need to focus on the bottom line today and how we can protect our risk going forward, grow our equity, and have a numbers-oriented approach. So tools to help you. Here's a somewhat of a unique, interesting tool is, know your crop budget, set target prices that allow you to make a solid return, and date targets throughout that season, the opportune time of the year, from March till maybe mid-July, and either sell at the earlier of those price targets or those target dates, and program those targets into a Google Calendar. So you could set reminders, let's say the week of April 1st and May 15th and June 1st and June 15th, that I need to be reviewing my marketing. And you could send yourself a reminder once a week that say, here are my targets and here are levels that I think I should be sold at. So Google Calendar is a free way to build yourself a marketing plan notification system. And we'll take a take a look back and jump into the software here and show you that we can build a custom marketing plan. So here's an example of a marketing plan for soybeans. So we know our yield estimate, our current cost per acre, our break even. We can build a profit margin based marketing plan. We can set up different date targets. Let's say, well, hey, we overshot this thing, but we changes to $1.50 and $1.80. Well, here's what that marketing plan looks like today with today's prices. It blew through it, but that is what it is. We have certain date targets that, hey, we need to get certain percentages of our production, or we want to sold by these dates. Maybe the crop looks a little worse, so we change our plan to increase a target, and this will send you notifications. Hey, your profit target has been hit. On 5,000 bushels. Take some action, and then it's up to you to take some action. But if we go back and look at our profit and loss, we can see that our numbers are, here's what our daily production is, our daily income, so we can focus solely on the bottom line, which at the end of the day is what we're in the business to do. So all in all, tracking our numbers, making confident decisions, focusing on the bottom line, trying to take some emotion out of the grain marketing, and tracking this data on a year-over-year basis is what we feel is the backbone of a financially successful farm business that is set up to thrive and succeed in a very competitive and volatile environment. So that's the software. What do we think are kind of the backbones of farm finance success? Tracking your data, measuring your results, and executing on a plan. All this stuff is crystal clear in hindsight, but if you just become familiar, aware of what your numbers are doing on a daily, on a week by week, month by month basis, it just slowly changes your thought process and makes you become, as profit focused as possible. Nobody can predict the future, but understanding your bottom line and how all your decisions impact that will make you a first-class farm business manager. And just a quick example on how small wins from maybe a cost management or a grain marketing standpoint can equal big results. Here's a simple farm. I just threw in some numbers that are somewhat realistic as far as revenues and costs at today's environment. A 1,700 acre farm, with a $75,000 of excess cash flow. Maybe that's 150 on some farms, or maybe that's zero or even a negative cash flow. But that's beyond the point of this. Wanted to show what is a 10 cents a bushel increase in your sales price and a $5 an acre in cost savings. Where does that get us? That takes our profit to $107,000. A 10 cent a bushel increase in sales price, $5 an acre in cost savings. That grain marketing improvement can be done. One sale during an epic bull rally once every 4 or 5 years can be dollars a bushel spread out, 10, 15 cents a bushel over many years, $5 an acre in cost savings, whether that's, benchmarking your chemical costs and throwing in a generic chemical or doing a flex rent. All in all, I'm a firm believer that tracking your P&L and tracking your numbers will focus your expenditures on things that matter. Producing yields, managing your farm business, having systems in place to track both the agronomic results and the business results, and invest in things that make your farm more profitable. Those can equal a 40% plus increase in net profit through those two tiny actions. Tens of thousands, sometimes hundreds of thousands of dollars a year by simply, in my opinion, knowing your numbers. So once again, controlling what you can, operating your farm like a Fortune 500 business, and reducing the emotion that's inherent in grain marketing are 3 steps to building a long-term financially successful business. So a quick look at who is Harvest Profit. We have Josh number 1 and Josh number 2. Josh number 1 on our customer success team. He's helping onboard users, answer questions. Brian is our engineer who is building the nuts and bolts of the software. Him and I work together a lot on building features, how to make it easy to use. And Josh number 2 is an overall project manager that just manages the overall Harvest Profit project. There are many benefits to this approach to farm business management and to the Harvest Profit software platform, and we'll just walk through those real quickly. So number 1, it gives you the ability to make confident farm business decisions in light of an ever volatile farm economy. We've said that many times. It focuses you on what matters. You focus on the bottom line of your farm. At the end of the day, your farm is a reflection of your profitability, of your net worth, of your equity, and we believe that focusing on your bottom line at the end of the day will have great benefits over time and make very positive impacts on the variety of decisions that you have to make in every given year. Making your operation as efficient as possible by tracking your field by field profits. So giving you the ability to fine-tune your overall set of manufacturing plants and operating like a big profit-focused enterprise. Reducing the emotion associated with grain marketing, the ability to weather the storm of these violent rallies, the sharp breaks, put time on your side, focus on your bottom line, and put a plan in place. Everybody's different, plans are dynamic, but by thinking about it, having a plan in place makes it easier to execute at prices that matter to your bottom line. Your farm is different than what ABC Grain Marketing Newsletter, what they think their bottom line might be. So you owe it to yourself to base your marketing on your operation. 5, tracking your prepaid input expenses and your grain contracts and just tracking all of this data over time reduces your chance of being shortchanged. I've come across many instances where a farmer gets charged an extra $10 a ton on their fertilizer over what they believe their prepaid contract was, or if a elevator claims that they don't have a contract that you put in place. Just having this data organized, in a well-organized manner, can prevent you from being shortchanged, and over the long term, catching, costly, 5-digit errors to your operation. So a professional data tracking system is key in ensuring your accurate data records and holding your partners accountable. Being able to perform proactive what-if analysis by focusing on your exact farm's data and the impact of whatever decision you make, whether it be cutting a couple dollars out of a certain cost line item or making a sale or a hedge, looking at the big picture. What are your profits and loss for this decision if we have a certain low yield environment, low price, high yield, high price, basically just being able to move the levers of your individual farm to see the impact of all of your decisions. Also, being able to confidently capture market rallies on future years' production by having the software set up on a year-to-year basis. You can judge each year as its own business. We all know it's very hard to sell future years' productions in years in which we rally because the market is inverted. By focusing on each year as its own business, we can really realize that, going back to 2012, those $6 plus cash sales for 2013 were incredibly profitable, but I would say that less than 1% of 2013 grain production got marketed during the summer of 2012. So if you can separate your farm into multiple years, it makes it much easier to capture very profitable sales, once every 5 or 6 years when we see these epic, huge rallies. And then finally, knowing your numbers throughout the growing season and being able to make confident numbers-based decisions is a competitive edge. I've been on the farms of 150 producers, and if you implement this numbers-based methodology, you will be ahead of the pack by a long shot when making decisions, when approached with growth opportunities. So implement this, whether or not it's with a software package like ours or through a custom system that you put in place. I strongly believe that having a numbers-based approach is a strong, very large competitive advantage in today's competitive farm marketplace. So what would it take to get started with us if you wanted to? We'd have a quick onboarding call, and you can go to the right and sign up for a time that would work for you. We'd execute a simple contract. We would help get you onboarded. We would input all of your data for you. We have very hands-on phone, email support, answer any questions you have. Continue to enter your data in if you email it to us. Basically working with you to get the most value out of the system, and then putting the framework in place for future success, building your financial net worth, and just giving you the ability to make these confident decisions that we've talked so much about today. So now we need to get into the pricing. The software is offered on an annual subscription basis, gives you access to all features, current and present. We're going to be working hard to build features that our clients want over time. What we have today isn't perfect. It's never going to be perfect, but we're going to strive to build a tool set based on what our customers want and need. Unlimited fields, concierge onboarding. Like I said, we'll input your data for you. Very hands-on email and phone support with myself, with the programmers, with Josh. And then we also have a farm finance course that has 40 plus videos, 13 different modules on all aspects of farm finance and risk management that you'll have access to that forever. And our pricing structure, we've implemented a variable pricing structure. We want to share incentives. We want our clients to be able to slowly, confidently, conservatively grow their farms over time, and we want to help participate in that growth and build profitable businesses together. So our pricing structure is for the first 500 acres, we have a $1,000 fee, and for every acre above that, it's 75 cents an acre to once again align these incentives, let the smaller beginner farms be able to use the product and ramp up over time to make it affordable for every size operation. And then with this, we include I'll just call it a common sense maximum. Um, we're not going to put a number on it. We might have some bigger clients who want us to do all of the data for them, conduct weekly calls. So we're open to getting as intensive as what we want, but we anticipate a common sense maximum of well under $10,000. So all in all, I think this variable pricing structure aligns incentives, like I said, and we're excited about trying to find a number that works for every size operation, from a beginning farmer to a well-established 10,000, 15,000 acre plus operation. So schedule a call to get started, to ask any questions, to begin the process if you want to work together and get onboarded. And you can do that by clicking the button at the right, or you can simply go to this link, calendly.com/harvestprofit/webinar to schedule a time. This is the same as going and clicking the button to the right. So once again, thank you for participating in this webinar. Feel free to reach out at any time, schedule a call, or email nick@harvestprofit.com. And I appreciate you being here and joining us today.